Welcome to the Passive Investing Made Simple Masterclass. I'm your host, Whitney Elkins-Hutten, Director of Investor Education here at passiveinvesting.com. And today we're going to be talking about beating inflation with real estate, the wealthy investor strategy for protecting buying power. Now, if this is your first time joining our live Tuesday webinar session, I just want you to know you're in the right place, especially if you want to turn your active income and savings into passive income and long-term wealth. But maybe you tried to invest passively before, but just couldn't get quite comfortable with the investment, or you actually invested in a deal and realized, oops, I made a mistake, or you just simply want to sharpen your passive investing skills. If that's you, you're in the right place. Now, a little bit about me. If this is the first time we're meeting each other, my name is Whitney Elkins-Hutten. I'm the Director of Investor Education here at passiveinvesting.com. I've been in the real estate game since 2002. I've done over 800 million in real estate transactions and currently have a portfolio of 6,500 residential units, 15 express car washes, and a myriad of other assets. I've done the fix and flip. I've been the active real estate investor. And now I get to spend my time here with you in my role of Director of Investor Education at passiveinvesting.com, and also doing some one-on-one coaching at ashwealth.com. Now, I have documented my journey in my book with Bigger Pockets, Money for Tomorrow, How to Build and Protect Generational Wealth. So if you're interested in how you can get started off with investing in real estate, and growing that into generational wealth, or just maybe even passive real estate, if that's why you're here, check out my book, Money for Tomorrow. You can get it on Bigger Pockets or on Amazon.com. But that whole journey, all those metrics that I just showed you about 800 million in real estate and all the doors and everything like that, that's to serve one purpose. And this is probably why you are here. And that is to get this one result in my life. 100% choice and control on how I spend my time. Now, I'm all the time talking about the 5 freedoms in life. Now, financial freedom, a lot of people are after, but that freedom unlocks the other freedoms. Choice, time, location, impact. That is why we're here. And that's what we can help you do here at passiveinvesting.com. Whether it's investing in our real estate debt fund or into our equity investments, we can help you take your active income and savings and turn it into passive income and long-term wealth. Now, make sure to join the Passive Investing Club. You can do that at passiveinvestingwithwhitney.com. There you get priority access to our open deals. You'll get a one-on-one call with me to discuss your investing goals and how we can help you map those out and achieve them. And then you also get all of our free education through our masterclasses and other resources. Now, today we are going to talk a little bit about numbers, but this is not financial advice, legal advice, tax advice. Okay, so make sure you take this information back to your investment team before making an investment decision. Now, we're not going to talk about note funds. That is a typo on that slide. We are going to talk about how you can use real estate to beat inflation. Okay, why do the wealthy continually invest in 3 assets? Okay, and one of them is not even, I wouldn't even call it an investment. Okay, it is an asset, but it's not an investment, and that's cash flow life insurance. Why do we always hear about the wealthy? They always have investing in businesses, investing in real estate, and then they have a cash flow life insurance policy that they can leverage. Okay, this is one of the reasons why, is because all 3 of those things, if invested in the right way, beat inflation, hands down, every single time. So don't believe me, let's do some math. All right, so did you guys know, we've all been living the past few years, so hopefully you do know, but did you know that the inflation data for 2019 to 2023, inflation in 2019 was 2.3%. In 2020, it was 1.2%. And then in 2021, we popped it to 4.7%. And then we hit an all-time high in 2022 of 8%, a 40-year high. And then even in 2023, it was a 4.1. Okay, so I pulled this data, we're at the January 2025. Okay, we're hovering still around that 4% for 2024. But here's the thing. Stocks, bonds, and mutual funds have struggled to keep up with inflation. Okay, maybe you're feeling the crunch here, and let's do some math. Let's show you why. Okay, but first, let's catch everybody up. What actually is inflation? Okay. Inflation is the gradual, in air quotes, increase in prices that erode the purchasing power of money over time. So, maybe you have, a carton of eggs and milk, a basket of groceries costs $10 in today's dollars, but that same basket of groceries 5 years later costs $13. Okay. Same basket of groceries, but the price has gone up on them. Okay. Now we can combat inflation in a few ways. Okay. We can actually combat inflation through lowering our expenses. Okay. Whether that's our investing expenses, whether that's our own personal expenses. Okay. That's not the simplest way to beat inflation. We can only do that so much. We can only cut so much. We can combat inflation through raising our income, okay? Getting a promotion at a job, adding additional streams of income. We can also combine the two strategies, decreasing our expenses and raising our income. We can do that and try to beat inflation as well. Okay, so there are a few things with it, whether if you're not invested in real estate at all, that you can do to help combat how inflation is impacting your life. But when we actually want to invest in things that take advantage of inflation, okay, so how do we do that, right? Real estate actually, especially when we invest in real estate, hold real estate, whether it's passively or actively, real estate helps protect against inflations, because if you think about it, it's actually a basket of commodities. I'm sitting in my house. If you guys are watching on YouTube, I've got the lumber in the ceiling and in the walls. I've got the piping, for my plumbing. I've got the electrical wiring. My piece of real estate is actually a basket of commodities. It is backed by a hard asset. Okay. This hard asset, especially if I, think of it as an investment and not just my primary residence, it goes up in value with appreciation. I can rent it out and create an income stream. Okay. And if I'm operating it like a business, I can get some tax advantages for that. Okay. So appreciation, especially with our multifamily buildings are a basket of commodities right now. For the last 5 years, the average appreciation has been 5.5%. It may not feel like that all the time in our portfolio. We get huge spikes and then we get some, modest or, just kind of flatline numbers, but the average over the last 5 years is 5.5%. Income growth on multifamily, you could rent a unit in some markets for $1,500 in 2003, but maybe that same unit now rents for $2,200. In today's dollars, again, inflation, that helps us beat inflation through locking in that income growth. And then we can actually take tax advantages like depreciation and other incentives that amplify our after-tax returns, reducing our taxable income. Now, I'm going to get into greater detail on this here in a minute, but I just want to kind of put these concepts in front of you. All right. I had a listener of the show write in. They saw, learn how to beat inflation with real estate, and they literally responded to me and they go, sure, beat inflation, and then interest rates take it away. Not all the time. And I'm going to show you how to actually avoid that or sidestep that in the future. Okay. We have an opportunity as investors to take advantage of both plays in this economic environment. Okay. But let's start back with, maybe you're new to passive real estate and you're just like, I don't know if I want to liquidate or move any part of my portfolio here into real estate. I've been sitting on the sidelines for the past couple of years, watching, what's happened with interest rates and some multifamily deals, and I'm just terrified. I want you to go back and take a look at your stocks, bond, and mutual fund portfolio and look back over the 5-year average. Okay, you might have a ticking time bomb going off there. So the 5-year average for returns in this, according to the S&P 500, has been 11.6% in the stocks. Cool, thumbs up. If you're holding bonds, say 40% bonds, according to Bluebird, the 5-year average return has been 0.6. meaning that our inflation-adjusted returns for 60/40 stocks, bonds, and mutual fund portfolio was 2.3% annualized real return, okay, after we accounted for an average inflation of 4.5% over 5 years. Yikes, that's not very much, okay? Some people might be scratching their head, maybe, hey, maybe I would have been better off leaving my money in the bank, okay? But we take that same portfolio, okay, and then we start investing into real estate, maybe allocating 50% to equities, 50% invested in debt, okay, meaning that we've got a nice balanced portfolio that's taking advantage of nice cash flow, but also some, some equity bumps, as deals cycle out. We take that invested over the same timeline, and we see that our real wealth gains are at 3.8%. Okay. So if you took the same 60/40 stocks, bonds, and mutual fund portfolio and then, annualize that over the last 5 years, you actually had a negative 8.8% potentially by the time you backed out inflation, other fees, and tax implications. So real estate consistently outpaces inflation and helps protect growing your wealth. Now, how do you do this? Well, first, we have to diversify. We've been talking a lot about that on the Passive Investing Made Simple show. Okay, we need to go diversify with inflation-resistant assets. And, when we look at those assets, it's not just real estate in general. We got to look at multifamily assets, maybe some self-storage assets, maybe adding in some cash flowing businesses like express car washes that are backed by real estate, and then adding in our note streams for predictable streams of income. Okay, we need to create a balanced and diversified portfolio across those assets. And then number two, we need to focus on cash flow and equity growth. All right. Now, I've been talking a lot to our investors about investing in our PIC real estate debt fund that really focuses on cash flow. But how can we also get some equity growth whenever the timing is right in the market with other types of real estate that either have natural built-in market equity, forced equity, like our multifamily deals or self-storage deals or car wash deals, or have the ability to compound returns like our PIC real estate debt fund. Okay, or how can we get an outsized return like with our PIC promissory notes that we have open right now? Now, again, this is about planting a plot, potting a plant, and then allowing it to grow as quickly as possible, not just up, but out, okay? We want the income to grow with our inflation. We want it to appreciate over time. Now, another thing I promised you at the beginning of the show, I would show you, especially for my listener that was like, what if, however real estate giveth, interest rates take it away. Not quite, because if you can put yourself in a position where you have locked your interest rate for a period of time and let the pay down of that debt or the pay off of that debt erode the debt, that is where you're going to be able to take advantage of somebody else's money in order to hedge inflation. Okay, so what do I mean by this? The ideal situation would be investing in a deal that had fixed interest rate debt, okay? Our traditional Fannie Freddie loan, say on a multifamily building. That type of debt is extremely costly. What if we went into an adjustable rate mortgage, but we locked it for 5 to 7 years, okay? A little bit longer than our plan, our investment plan, okay? And that's the key. Longer than your investment plan, okay? And then if it fully went into, adjusted, do we have enough reserves, enough cash sitting on the sideline to extend the loan and also pay for the next rate cap, okay? It's those two maneuvers that you need to make sure that you have enough reserves for in order to take advantage of adjustable rate loans, okay? That is not what has happened to a lot of investors or operators over the past 12 to 24 months. Okay, they didn't see the rise of interest rates that quickly. They didn't see the rise of interest rate caps going up that fast. Okay, and they didn't have the reserves on the sideline to take advantage of it. Okay, so the pro tip any equity. And this is the amazing thing in today's market, you can look forward and go, great, I'm going to look for deals that have either a fixed rate debt plan on them or the debt is fixed for a certain period of time and let time erode the value of that debt. All right, step number 3, okay, reinvest your returns for maximum growth. Now, one way we can reinvest for maximum growth is actually leveraging tax benefits. Okay, so how can we, again, buy an asset that's going to produce cash flow that adjusts as the market, inflates? How can we put it in, buy into an asset that's going to appreciate, that's going to, put balls in our court? How can we leverage the tax benefits to be able to reinvest those dollars to amplify our wealth faster? Okay, and this is, again, where real estate shines. Real estate allows us to take advantage of what we call a depreciation. Okay, this is where we partner with the IRS to get a phantom paper loss, okay, that we are, can reinvest, it helps shelter our income. Ideally, so we're setting it aside for the repair of the asset, the longer we hold it, or we do what we call a cost segregation analysis, and we accelerate a lot of those losses to the first 5 years of the project. Or if we take advantage of our bonus depreciation tax incentive, we're taking all those accelerated losses in year 1. Either way, we can use those losses, however quickly we can push them up to shelter income, but also if you're able to unlock the ability to save on taxes across the board in your portfolio and take that tax savings and reinvest it back for growth, okay? So, for example, if we have a $500,000 investment on a passive real estate, in 2025, current tax laws, okay, we have 40% bonus depreciation, meaning if that $500,000 investment, we could be able to write off $150,000 to $200,000 in year 1 depreciation, which is really powerful from a tax savings perspective. Okay, step 4, you can do this yourself. Okay, partner with experienced operators. So either you have to be the experienced operator or you have to partner with other operators. Okay, what are you going to look for in an operator, whether it's you or somebody else? Somebody that's knowledgeable about the asset class, knowledgeable about the market, has expertise in the market, has a proven track record at this type of business, be it multifamily, self-storage, express car washes, debt funds, you name your poison. Okay, they have the network in order to execute on the deal. They've got the team and the time. Okay, this is where if you're going to be an active investor, you have to have all these things in place. Otherwise, you can be a passive investor and invest with experienced operators. Now, the key takeaway, again, our takeaway today is how do we beat inflation? How do we take that average of 4.5% over the last 5 years? And I know a lot of people would argue with me that it's higher than that. How do we use real estate to beat that inflation hedge? Okay. So for one, we have to understand how inflation actually erodes traditional portfolios, why they don't stand the test of time. Okay. Okay, it's not because they don't kick off a teeny bit of cash flow, or it's not because they don't appreciate, it's because you don't get to pull big levers in cash flow, in appreciation, and tax benefits all at the same time, okay? But real estate can offer that consistent cash flow, appreciation, and tax efficiency to allow you to be able to beat inflation by a few percentage points or even more. Okay, but it does mean that you have to be with the right operator, either you yourself or investing with the operator to ensure that your investment can thrive in that inflationary environment. Now, guys, if you're alive, make sure that you have already joined our passive investing club at passiveinvestingwithwhitney.com. And if you're here live, don't go anywhere. We're about to start the Ask Me Anything part of our show. Awesome, guys. Well, just a little primer on inflation. What did you guys love? What would you love to see? What are you going to take and incorporate into your investing? I would love to know that. Go over to the chat. Let me know. Also, I invite you, if you've got a question that you have been dying to ask me or our team, this is a great time. Go over to the Q&A box and drop that in as well. Awesome. Well, okay. If you guys don't have any questions, somebody has to have a question about inflation. But if you don't, I just really thank you so much for spending your time with me here today, but also investing in yourself. I'll hang out here for another minute just to watch the Q&A box and chat box. Otherwise, we will see you next week.